Cool. We're back. I'll make the smoothie later. Doing just greens. Cop out, but yeah. So let's see. Got about 30 minutes.
Quite a number of people who have everything that is big in life, and they are not happy.
So where is the cord? All right. Plug in the phone. The other phone, but cool. All right, we're good. Sure. That's fine. So, all right. So, about 20 minutes until everyone shows up. So, if y'all have questions, feel free to ask. I thought last night's live was pretty good about more of the psychological side on people investing, how advisors approach clients, and hopefully it'll be kind of the same conversation today. So, hey everyone, morning. Sorry, just waking up, so. I know, no excuse, but I'm normally up around 4. I just didn't wake up this morning.
Some home improvements look good for a season, then fade. Others fix one
But,
problem, yet create
hey.
another. But replacing your old windows with Window World, that's a permanent upgrade. Our American-made windows are installed by licensed professionals, built to block out heat and give your home lasting curb appeal, year after year. All backed by a lifetime warranty. That's a forever upgrade and a lifetime of quality. Call 1-800-GET-WINDOWS today. Window World is a proud partner of the Louisiana Ragin' Cajuns.
Porch. There we go. Cool. So that's gonna run in the background. Is the music up, down? So. Hey everyone. Hey Duplex. You're a little early, but if you want to hop on, you can. I'm just kind of listening to music, answering if there are questions before guests start showing up. But yeah, no rush. So, but yeah, I guess for everyone listening, this is kind of the game plan. Gonna have a panel of guests, all in different professions. We have some CFPs, some investors, some real estate, and how they approach their money process, and to get people started on some sort of money journey. Hey nerd. Because it's all different. Like, the real estate person has a different goal than the investor. Because, I mean, margins are different, cash flow is different. Maintenance is a big difference. So, let's see. Hold on, gotta check something.
Anything you can be interested in, you'll find others. But it's absolutely stupid. Spend your time doing things you don't like.
Cool. There we go. 2 phones. One for the setup, one for the live. But yeah, so
After all, if you do really like what you're doing, it doesn't matter what it is. You can eventually, you should eventually become a master of it. The only way to become a master is you really
I don't know, 9:41, so 11-ish minutes. If y'all have any questions or music's too loud, too little, we will have a Q&A after, but majority of my focus will be on the guest and questions that they have in the conversation. So I will not be very attentive to the chat, at least at first, because I want to, give everyone their voice and thoughts. But, um,
Hello, I will pre-DJ with you.
hey,
How are you? Alexa, lights on. How are you?
doing good. How about you, nerd?
Doing good, considering I lost so much money. But yeah, still pretty good in irrespective. I don't know, I haven't really looked at the damage, but in one of my accounts I lost like close to $20,000.
But is it like a loss or it's unrealized?
I mean, yeah, it's not unrealized. If anything, there's unrealized gain, right? It just went down, the valuations went down, so.
Yeah. But I didn't know if it was like an option play or something.
Oh, no, it's just standard stocks. Well,
Okay.
I have derivatives. They lost money too, so.
Mm-hmm.
But, they're like, essentially, my derivatives are basically leaps, so they're essentially long-term plays.
Okay.
But yeah, how about you? How did you fare?
I honestly didn't even check my portfolio.
Oh, you didn't?
I need to set it up some limit orders and stuff though.
I gotcha.
So I have a feeling Monday is going to have a little bit more.
Usually there's a bounce up when a market goes down like this.
Yeah, it's like a dead cat bounce.
Yeah, pretty much. Let's see. There's one thing I wanted to do with my accounts, which is like, Fidelity allows you to integrate external accounts nowadays. So I like to do that because I hate logging in everywhere. I'm lazy.
Wait, how would that? So you just log in Fidelity and your Schwab opens up?
Yes. In essence.
Or does it overall combine like everything? So when you open Fidelity, does your net value combine the accounts?
Does it combine the accounts? No. Some allow you to do it because it's like it's connected via like Plaid or eMoney or something like that. So it allows you to have like a dashboard that sees everything. But hold up, let me just get something.
Sure. But Yep. Morning. I didn't do anything yesterday. No buying, no selling. My orders that I do have didn't fill. So, we'll see what happens Monday. Dang. 2.8 million? That's almost like you wonder if they had some sort of insider knowledge. Yeah, I'm not in that circle. I don't have knowledge to that kind of information. Man. So wait, they do it before or after the tweet? If he did it after, that's just I mean, that's crazy timing, but pretty smart. Before, man. 5 minutes. Yeah, that's eerily insider. I'd almost consider that insider.
Howdy.
Hey, he's back.
It didn't work. I was trying to merge it, and I tried to merge two accounts. The M1 worked, and then the Vanguard like it didn't work, and then both didn't work. And I was like, maybe it takes time. I don't know. We'll find out another day. But yeah, just in my Fidelity accounts, I've lost $18,000. So
Gotcha.
just one account. I have other accounts. So
Yeah, I mean, so I'm not crazy invested in the Mag 7, so I'm sure my loss isn't as big, but I probably have like $5,000 movement.
that's barely anything. Percentage wise, what do you think you lost? I think that's the more important one.
Percentage is probably gonna be not as much because I have balances. So percentage, it's probably gonna be like 3%.
Yeah, sounds about right. Market's down 2.7. Yeah, that's around what I lost. If I had to guess, if I aggregate everything. But such is the life that we lead.
Yeah.
Say
I'll tell
that.
you what, that was one so far that's been top notch for me is betting on the overseas growth.
I see.
Has been a good balance.
International, huh? International. Oh, that's a rap song. But times like this, I look at what I can buy. Like I hold off on selling, and then I just because if I should have sold it a while back, right? If I sold it, should have been sold a while back. So when markets are falling like this, I look at what should I buy because I do have a lot of cash sitting in the sidelines. The derivatives are playing out exactly as I expected. Essentially, on the upside, they participated. On the downside, it's mitigated. It doesn't fall as much, right? If you have a call option, and the market has an aggressive pullback, most of these are a little OTM, so it's not dollar per dollar move. So I'm benefiting from that in a massive way. And in addition, because they are call options, even if there's volatility, it picks up in value, even though it's going the opposite way, because now volatility has been introduced and higher volatility leads to better pricing for options. Anyways, I just thought of that right now. It's not something I strategize, but it's performing exactly as I expected.
No, I mean that's one too that I think of course hindsight's 2020, but I'm curious about how the movement, if you were to do price comparison, if it changed or if you bought it so far back it doesn't even matter.
Oh, I do have checks for this stuff. I have a stock dashboard where it prices each stock live. Like they move, my percentages change. All I have to do is update assumptions, and I kind of check them at least usually on, I don't know. It takes a while for me to check them, so maybe like 2 quarters. Like if I'm gonna take an action, I update it, and it usually takes me like a couple quarters to a year to even think about it. Most of them I just ignore because they're not gonna hit their price targets for a long time. But for the ones that are close to the chopping board, I take a look at. For the ones that I don't own, I take a look at. It's very simple. I own 50 stocks, but I don't really look at all 50 stocks because
Right.
the percentage they are tracked all on a dashboard based on their price moves, based on assumptions that are recent, and then they are updated as they're one of the underperformers or they're one of the top performers. So if that makes sense.
Do you have like a percentage movement timed in so that like it forefronts to your screen, or it's all just background noise?
Um, I look at roughly 300 companies. Of those 300 companies, I invest roughly 50 of them, 50 to 60 of them. And then do I look at the price changes? It's one factor, but it's not the only factor. I'm evaluating them based on the price change. That is one, but also earnings assumptions, valuation historically, at the worst case scenarios. So they
Right.
could have a current valuation of like 50x, but then I look at it like what was their worst valuation ever, and then if it's like 30x, then I would stress test the performance given like, oh, what if it's 30, 40, 50? How would that look from a percentage basis to my target price? And then obviously I have like a fixed earnings assumptions that I will update if they're close to the chopping block.
Gotcha. No,
I know I don't have AMD.
my system is not nearly as advanced as yours. I try and keep it boring.
Mine are pretty boring. It's a lot. It's a much more boring than you think. Just sounds complicated, but it's not. It's not.
GG, I used to have a bunch, but I don't, honestly, I'm trimming so much. I may have 30 now. Because I'm very more into ETFs and the individual stocks, about 30. Oh, it's not nearly like I used to have probably 100 or more. 100, maybe 110. That was just way too much. I couldn't keep track of that. Yeah.
How do you
Also,
usually track?
you're diluting. Like I was diluting my capital, so having that many positions was hurting me, even if I did get crazy growth.
I see what you're saying. Your best picks aren't getting the proper movement because it's a small allocation.
Mm-hmm. Hey,
That
dude,
makes sense.
pose.
Good morning. Good morning.
Hey, how you been, dude?
Pretty good about yourself.
Good, good. Just looking at the map now, being a little sad. I'm okay.
The market does will do what the market does. It'll rise and fall. It'll be back.
I'll give you guys my biggest positions. 26 G's in a S&P 500, probably because it's in my old IRA account. My old former employer 401. That's the largest one. It's ETF. The next one is Interactive Brokers. Would not have expected that. That's crazy. Why would I own so much of that?
How many stocks are you holding? Is it 30?
50.
50? Jeez.
Yeah.
Yeah.
I'm like shocked. I'm like, why do I own so much Interactive Brokers? And why do I not know this?
It's
Yeah, I
probably
lose track after
one
like
of
15.
my downsides is I'm getting better at it, but I just hold things too long. I can't cut. I have that psychological barrier of I don't want to cut a loss.
It's okay to hold things longer than you should. I mean, if you're a buy and hold investor, you should be holding it for the long term. Like, I just found out why I have Interactive Brokers as my largest position. Guess what? Why?
What's that?
Well, like I told you, I don't look at these things. So it's the largest position because it's up 111% in 1 year. I was like, what?
Nice.
And I just look right now. Do I need to cut it? And it's like, nah, it's still okay to hold. Okay, so I just let it run. I don't even cut it. But 26K makes me a little uncomfortable because it's roughly 3% of my net worth, right? So,
That's nominal at that point.
huh?
Like the number itself is huge, but like percentage wise, that's nominal.
It's nothing. Yeah, it's really not. I try to keep things. I try. My Nvidia position is actually larger because I have leaps on Nvidia. So,
As you should.
so like I only have. Let's see. I have, in terms of leaps, I have about 18,000, 19,000. This was actually at roughly 60,000 in leaps not too long ago, and I cut it. But I cut it down to 2 leaps, but the notional principal exposure there is probably double, right? So if it's $19,000, that these leaps, the notional principal behind them is probably 40, 50K quite easily. So that's why that would have been my largest position in theory. But how is your business doing? I'm always like looking up UPS stores to buy, and I honestly I don't think I would even if I could,
Yeah.
because I am not an operator. I just like to fantasize about it. So
Fair. The only reason I ended up buying a business was because when I was younger, I had a goal of just I wanted to be out of corporate, like out of working for somebody else at some point. And it's like, could I potentially do it through real estate? Yeah, but how many fucking units will that take?
a big
Because
one.
with real estate income, it's always a big roller coaster, right? Like like 2 years ago, I had a roof leak on an 8 unit apartment building, right? It was $40,000, you know? So like that can wipe out all your fucking profit in one go. And so I was like, all right, I don't necessarily want more real estate. I want something that's more stable. And so the business made sense because I could move into a 100K base income relatively easy and it'll like stay there because like my potential profit is up to like 150 or so.
Yeah.
And so I'm like, all right, if I can always make 100 grand off of it, I'm fucking fine with that. You know, like it's not buku money, but at some point I know that one, I won't be working 30, 40 hours a week, you know, which now I'm down to like less than 10 hours a week or whatever.
Yeah, I heard.
And then at some point the business debt will be paid off too. So that'll be another $50,000 a year,
Oh,
you
that's
know,
easy.
that
Yeah.
I'll have. So it's like the income will grow and rise over time. And so it's like it just made sense overall.
In terms of
Especially now that I've gotten to like more freedom from it.
in terms of revenue growth, like, are you projecting higher revenue growth over time, like fixing like little things, adding value here and there? 'Cause I feel
Initially, yeah, like taking over the revenue was around 800 and then I grew it to like
oh, so you
840,
get a lot
850.
already. Yeah,
And then I grew it to like
1M.
just towards like 901, but now I'm on track to just do like 875 or so. So it's like I'm still up over when I took over, but it's still like not quite where I want to be. Like I want it to be by year 3, year 4 towards 100K, not 100K, towards a million. But that's proving difficult, right? Because like there's a lot of I've increased prices, I've gotten new customers, I've done some marketing, but then for me to get to a million, I have to go into like print business. Like UPS stores, some of us do a lot of print. Like I know a few store owners who do 30, 40K a month in print revenue. I do like 3 or 4,000 a month in print revenue. So it's like that is a space I can grow, but it's a space that comes with a lot of freaking headache. Like, because it's a big learning curve and trying to be artsy fartsy and get your print products to look good, you know?
Right.
And so for me, it's like, I thought I was going to get there through print. And now I'm like, I might just skip that, you know, like I might be okay being towards the 900K mark, you know, and kind of like slowly raising prices over time to try to get me closer to a million. So will the business get to a million inevitably? Yeah, but that might take 10 years as opposed to 4 or 5 because I don't want to put the time and effort and energy into print when my store has like a lot of overall foot traffic. Like our foot traffic is like 5,000 a month in terms of people that stop in our store. So it's like we don't have the bandwidth to really effectively do print in our footprint of space that's only like 1,100 square feet, you know? So it's like very high volume, very tight space, and not enough space to actually fully and comfortably produce high level print products that would be profitable or whatever.
I see.
But overall, you know, it's good.
Yeah. No, I do find the UPS an interesting like choice. Like, what made you choose that franchise over something else?
So because I'm in real estate and because UPS stores do notary services, I was going to a UPS store near me all the time. And I would talk to the owner on occasion. And at some point, he just looked tired as hell. I'm like, dude, like, are you going to sell this at any point? And then he laughed and I laughed. And then he was like, yeah, I just got back in contract. I'm like, back in contract? Because he had gotten into contract to sell it at one point. And then one of the partners passed away. And so they like let that dissolve or whatever. And so from that point, I started talking to him a lot more about the business, you know, how long he's had it. At that point, I think he had it for 35 years. And he was telling me it's like, it's a great business. He's put his kids through school. He should have bought a second one and yada, yada, yada. And I'm like, okay, this seems like something that I wouldn't mind doing. Because again, I was going there frequently for like notary services to refinance, buy, sell, transact, whatever, quit claim deed. And I always thought that it was busy. And so I was like, I see him here. And it's like one particular week I was there probably 4 or 5 times in a week. And he was there every damn day. Like one day I was there at like 9 a.m. Next day I'm there at like 6:15. Next day I'm on a Sunday. He was there every day. And I'm like, you gotta be tired of this shit. Like, and he looked it too, you know? And so I was just like, yeah, let me just ask, because I was at that point of like, okay, I'm nearing my goal of like my goal age of potentially leaving corporate America. And so I'm like, yeah, let me just ask, you know. And so I asked him, we had a conversation. He was in contract and he said, if this one falls through, he'll let me know. And I wanted it to fall through because he was only a mile away from me, so I could walk to work. I was like, oh, this would be fucking perfect. You know, I ain't got to go nowhere. But that one didn't pan out. And so I started to look for other stores. And then I found my store in Hyde Park, Chicago.
Okay.
Yeah.
Hello, all.
Hey, good morning, everybody. How y'all doing?
Morning, morning.
Yeah, so I guess everyone's pretty much here. If y'all want to do like an introduction of yourself.
John, you lead us. Start off.
Sure. So I'm Jonathan Judice. We have a family restaurant, business-wise, and property management. And then I do investments. That's kind of the scope of my business.
Hey guys, I'm DK. Been a financial advisor for 21 years, and I have an advisory, business joined up with a company, and it's my bread and butter. Love to share knowledge, and just want to hear what you guys have to say.
Hey guys, how's it going? I'm Sultan. I'm an accountant by trade, so that's what I went to school for, and I also trade futures, day trade futures. So that's most of my stuff on TikTok, and I have a small Discord. So looking forward to meeting you guys and hearing more.
Amazing. Yeah. So I'm Nerd Million. Number one, I love advisors. I think I'm going to be an advisor when I get out of the corporate world. That financial advisor is kind of like my next goal. Two, I have a friend who's also a CPA, and I always talk to ChatGPT regarding how ways I can mitigate my taxes. Like, what's the tax strategy? Like, when I decide to retire, like, how can I pull out money without getting taxed? Like, these are like my favorite ChatGPT questions. And then I always tell it like, not enough money saved. Come up with something better. Like my relationship with ChatGPT is not healthy for ChatGPT. So, but anyways, I graduated from UCLA with economics, USC with an MBA. I'm a CFA charter holder. I worked in investment research for public equities and MLPs for a portfolio manager. Now I'm kind of like a relationship manager in private equity. Off to you, Duplex.
How you doing? My name is Duplex King. My actual name is Torrance, or T. I go by T primarily. I've been in tech and telecom sales for the better of a decade. Found it important and prudent to invest my money in something, and I chose real estate because it's a tangible asset. I like tangible. Real estate is big for me because you get to make money three ways: cash flow, capital appreciation, and then tax savings. Right? As Nerd mentioned, like real estate is probably one of the best ways to mitigate a lot of your like tax spending, because that's one of our largest expenses next to like childcare and healthcare. Is like taxes probably most of our largest expense, 20, 30, 40% more per year. And through the acquisition of real estate, managed to save a ton of money and then kind of keep reinvesting that money back into real estate. So over the last decade or so, scaled from a duplex up to 56 units, sold some to buy a UPS store franchise. I am probably always buying and selling some real estate, and I do a little bit of stock, but not a lot. So it's like anytime my stock gets over, like close or over to 100K, I'll sell it or trade it or something and then buy real estate.
That being said, I do have a tax question to the CPA. So he mentioned real estate as an excellent way. It is, I do agree that that is the case. I've spoken to a lot of clients where what they do is, so they're older fellas, and then they're ready to retire, and they're trying to do Roth conversions. And how they strategize it is by becoming a real estate professional, and then they start doing, construction projects, value add projects, and then they're able to offset those conversions. Um, is that okay to do? Are they doing? Is all they're doing like completely valid and okay? And if you're not a real estate professional and you decide to do Airbnb, would that be okay to do as an Airbnb guy, even without the real estate professional?
So you said they're changing from, you said to real estate off of what their like regular profession?
Yeah, so usually they have like a regular job. They built up a lot of money. They have a very sizable account, and now they're buying up real estate so that they can do traditional to Roth conversions. That's going to become income, but they'll be able to fully offset that with real estate, with the real estate deductions that they're going to get.
Yeah, I don't know. I wonder, like, it's funny, like, I do all my accounting work is all nonprofits. I actually just switched two companies that do real estate. So I had my first, like, construction client last year, but they're more like commercial versus individual, like, real estate, which it seems like what you're talking about. So I don't know. I honestly I don't know the answer to that question, but they would probably have to, like, I would assume, like, either be certified or just show like some actual like an actual like conversion that they're really like doing that, I guess, like full time, I would assume.
The answer is yes.
Okay.
Like based on my experience, the answer is yes. So as long as you're managing the real estate from some aspect, whether it's the acquisition or the project management and or just the management of the rental property, you do qualify or end up qualifying as a real estate professional.
Okay.
And you don't necessarily need like a real estate brokerage license to qualify for that. So as long as
Are
you're
you
the one
doing that
that's like the
strategy?
front man.
Are you doing that strategy, Duplex?
Yeah. So throughout the
retirement
year, throughout the year, I'm overseeing and project managing like construction or whatever. So like a current project I got going on right now, I bought a property out of foreclosure for like 73,000. We're putting, in reality, it's like 38,000, but in terms of the budget, it's 46,000 in terms of the scope of work. The project just came in less, but so I'm 114ish or so all in on the project, but I'll be able to cash out refi and get a new loan against that property where I'll be able to pull money out tax free. So it's like there's a lot of ways to make money in real estate. One is that tax savings, but I think the biggest one is like what they call the BRRRR method, where you're buying a property below market value, you're going to renovate that property, and then you can keep it, hold it, and then refinance it. The refinance is to allow you to get the benefit of what most people do with flips, but you don't get a tax hit with flips, right? Like with a flip, you get a tax hit. But when you keep the property, you leverage the property, you put debt on the property, debt is tax free. And so it's like, like good debt and bad debt, right? Like, so in my opinion, as long as you have debt tied to something that can produce cash flow, tax savings, and capital appreciation, it's good debt. But any other debt is like, I don't know, right? I got, 1.1 or 1.2 million worth of debt in total. And some people call me crazy. And it's like, all right, sure, but I got a comfortable lifestyle from it, because the debt is to be in service by the assets themselves, and the assets are growing in value year over year.
I would caveat that with where rates are, though. Rates are a lot higher today. You might be
Yeah,
getting
rates doesn't
some
matter,
leverage.
right? Like, but that's the rate is what keeps a lot of people from buying, right? Like, of course, 5-10 years ago, rates were phenomenal, and you got a 3 or 4%, right? Great. I was making $600-700 a property back then. But the rate's higher now, so now I make $300 or $400 in profit now. So it's like, am I still making money? Yes. So do I care about rates? No. But rates are what keep a lot of people from it and out of investing in the first place, because they're like, oh, well, the rate's going to, set you back. But all that interest that you pay because of that higher rate is a write-off on your tax return at the end of the year. So you recoup some of that. Like you won't get it month to month, but at the year end, you'll get 25% of that back or so. So it's like, it comes back to you in some kind of way, shape, form, or fashion through your taxation, like your tax write-off. But yeah, upfront, the rate for a lot of people is a major deterrent. Like for like the average home buyer right now, rates fucking suck. But for an investor, they don't care, because out of pocket, I'm not paying it anyway, Like, okay, 1 month every 2 or 3 years, somebody doesn't pay on time, and then I get that hit. Okay, no big deal. But for the last 2 or 3 years, everybody's been on time and everything's been fine. So it's like, do I care about the rates? Like, so from my perspective, in terms of if I do hard money, I'm making acquisitions on properties and paying a 12% rate, right? And then some people are like, what the fuck? I would never do that. And that's why you're broke, because you would never take that chance, right? And so it's like, it takes money to make money. So it's like, yes, it cuts into your potential profit, but am I still profitable?
Yeah.
Right? Like, so it's like, if you can still make a profit, it's okay, right? And so that's my opinion anyways. But that also is what keeps so many people from investing in the first place. Like, my first property back in 2014, everybody was like, oh, well, what if the market crashes? That's always been a thing. It was a thing then, and it's a thing now. It's a thing in '08 and '09, and it's a thing now. Like, we're always talking about the potential crash. But regardless of the crash, people still need a place to live. People are still going to rent from you, So it's like, it kind of weathers that storm. Like, honestly, I wish housing wasn't as commoditized, but if it wasn't commoditized, I wouldn't be rich right now. So it's like, it's a good way to still make money because people need it and because it's commoditized.
But that's always the thing, though, right? Is always cyclical, especially with stock market, real estate market, whatsoever. It's always going to go up and down, right? Now the thing
Exactly.
is, are you going to have the capital on hand to utilize that opportunity, right? And just like you said, a lot of people, they're like, oh my God, rates are high. Well, you're not looking for your forever home. It's an investment, so keep it as such, and you have to price your whatever accordingly. But if you're going to flip, just get a flip. Rate shouldn't matter to you. But if you're going to hold it and get like duplexes or whatsoever, you're going to have your tenants paying for all that stuff, right? So, but no, that's a tight strategy. I like that. So, what do you think about investing in REITs?
Me personally, I don't, because
Yeah.
I am a REIT, right? Like
Right.
I don't see the point in putting the money into somebody else's project where I could do it myself, right? A REIT will give you a 10% return and maybe a 20 IRR or whatever, and that's great. But I could do that myself and make more. So it's like, it's a good strategy if you don't want to be the one that's the front man doing all the work. So yeah, I like it, but for me personally, it doesn't make sense because I already
doesn't,
do it
right.
myself.
Right. Okay.
I raise money for a
Average
private.
person, probably for like the average person. So like me, I'm not. So I'm like just now getting into the real estate game. So for me, it'll probably be more like a REITs, because I'm like you said, if you're not the front man, I'm more like, I do my accounting
Baby
and
step
I do
into
my
it.
trading. Yeah, but then for like our personal home, we just got a home just because the rates
Yeah.
just keep going, and we're like, hey, we gotta jump in. We had the money saved and that sort of thing, and maybe we'll refinance. Maybe we'll get to like the fives, mid fives or something. It'll probably be a win. But for like the average person, would you consider like REITs? Like, so like somebody like
Yeah.
you, I guess that's
So
not. Yeah.
I think it depends on what kind of REIT, and like, are you talking about the REIT stocks or like somebody's actual project where they're like syndicating the deals? Because that's like, they're going to lock your money up for 3 to 5 years. And so are you okay with your money being
Right.
locked up for 3 to 5 years? If you're okay with that, then go for it. But if you're not, then I would go the stock route and probably consider like database stock, right? Because here's the data centers like Oracle's and whoever else of the world who own these physical real estate spaces, but it's tied to a data center. So you can invest in real estate that way, where you buy it from a stock perspective. That way you're a little more liquid. So it depends on
Right.
how
Yeah.
liquid
And that
you
was the
wanna
route that I was actually asking for many of us.
be. Yeah.
I work for a private REIT, so I already got that.
And me
But multiple
personally,
REITs.
I
There's
only
like 4 of them.
hold a few REITs, just because it's, you see the value in certain markets, but I wouldn't get REITs in certain areas. So like mine, it's pretty much all data center based,
Right.
but I'm actually trying to sell out of my big commercial REITs because those projects are just ridiculous, and over time they haven't done well.
They have publicly traded REITs have not done well, and I'll tell you why. Because their yields, like not too long ago, or like a while back, was like very low. You could tell that they're gonna be bad investments. The yields were low for private REITs, private funds. The returns are like the yield is a lot higher. They go from 6 to 9%. The target returns are 9 to 13%, and some of them outperform that. So private REITs very different from publicly traded REITs because publicly traded REITs are based on what they're trading in the market, whereas if you're going for a private REIT, you're getting at net asset value, vastly different.
Yeah.
Market prices in the stock market is always overpriced. Is what I'm trying to say. You're always paying a higher multiple.
I am curious though, Duplex, what made you choose Duplex over some of the other real estate investments? So I know we're single family. That's our target. So we buy the houses and then, churn renters versus some of these big complexes that people push.
So the reason I like duplexes or just small multifamily in general is because for the average person, you can buy it, right? Like if you can afford a house, you can afford a duplex. If you can afford a condo, you can probably afford a duplex. And oftentimes, depending on the market, they're not too much more expensive. They might be 50 or 100K more, which may sound like a lot from a sticker perspective, but it ends up being cheaper for the first time home buyer because you collect rental income that offsets the cost of the acquisition of that property. So if there's a property that generates 20,000 bucks a year, the bank will count 15,000 of that income as your income. So it helps you to better qualify for the home. And so when you look at it from a mortgage perspective, if I just speak about my own property being a property that I bought in 2014 for $235,000 back in Chicago, right? Which I'm from Ohio. And looking back to Ohio, homes in Ohio were like 30,000, but I wasn't in Ohio no more, so I couldn't buy that, right? And so I'm looking at Chicago like, damn, this shit real expensive. Like, I don't want to pay for all this. And so to me, a multifamily made a little more sense because I would have some income to offset my cost of living. So for that first mortgage, 1530 and change or whatever it was, I was bringing in $1,000 in rental income. So I'm living in Chicago for Ohio prices, right? So my mortgage again, 1530, my income from the rental, $1,000. Now I'm in Chicago for less than 600 bucks a month. I was in Ohio for 525 for a 2-bedroom, right? So I was like, oh shit, I'm kind of back to my Ohio cost of living. And so for me, it just was a no-brainer from that perspective. And so going forward, I like the multifamilies as my strategy because if somebody moves out of that single family home, who's stuck with that bill? Who's stuck with that mortgage? I am, right? Like I have to be able to fully weather that storm. Now, if I have a duplex and somebody moves out, I still got some rental income coming in to cover some of that cost. Maybe it's covering all, or maybe it's not all, but it's some of it, right? And so like the second duplex I bought was in 2018. I bought it for 65.5 in Ohio. The mortgage on it was 525, I think. The rental income for each unit was 775 or 750 and 800. So one unit covered the whole damn thing. So if somebody moved out, I didn't give a shit. You know, it was like I could take my time. If I didn't have a cash save, I could take my time because I was still covering my expense. I was still above break even. And so I like multifamilies over single families for that. Like if somebody moves out, there's still some income. So it's, a lot of people talk about diversification and redundancy. It's a diversified asset within and of itself because you got two separate families, right? With two different incomes, two different backgrounds covering the cost of that property and potentially allowing you to profit. And so if you can find a 3 or a 4 unit, then of course, more doors, more income, more potential profit. So I like that overall compared to a single family home. Do I still buy singles? Yes, because there's just so much more of them on the market, right? It's like, it's hard to not find a single family home in Ohio, right? The multifamily homes have a lot more competition, a lot more people trying to buy. The price sometimes isn't as compelling, right? Like I bought 4 units in Ohio for 60,000. Those in that same market, 4 units are now 250, and are they still profitable? Yes. But does the price still suck? Yes. You know, so it's like I'd rather have the one that's at least going to have the additional income to help cover costs or to help me potentially profit.
Yeah, I agree. That's good balancing. Because I know with us, to having offset house with the house, it's tougher.
Yeah. And you get to scale much more rapidly. Like for the same single transaction, you could buy up to four doors in one transaction for the
Right.
average person, right? So if you're going to use an FHA or low down payment conventional or down payment assistance, wouldn't it be best to maximize your ROI on that property by buying a multifamily as opposed to a single family home? You know, like a lot of people, no fault to them, but everybody wants the American dream. I got to take care of my family. I got to get me a regular home. But wouldn't a home that makes you money better take care of you? Like, you know, like I know I don't want to work as hard, but you know, I don't know who dreams of working. I really don't. I like making money. I like traveling on that money, but I don't like dream of working. But I am a bit of a workaholic. So it's like, but I don't want to work on things that I don't want to work on, if that makes sense, right? So I found like the multifamily route and the investing route to be good for me overall. And so I
And
talk about it 24/7.
and that's very important what you said, right? More doors kind of frees up, well, kind of brings in cash flow, right? Because
Yeah.
let's say, for instance, in New York, I'm down here in Florida, but like in New York, you have the multi-families, like multi-families, you
Yeah.
know? So to cover that, that mortgage for that building, I mean, what, a couple of doors will take care of that. But down here in Florida, you'll get a quadruplex, and if it's a FHA, right, you as the owner could stay there for like a year and pretty much like live mortgage free, right? Because you have one unit taking care of the whole property, right? And the other two units are just, it's just cash flow coming in, right? So where you get a lot of people is like, look, hey, I want to buy single houses, you know, single family houses here, there, and everywhere. But again, when things get tough and people move out or don't pay, you're going to get, you know, stuck with the bill. It's not a bad thing. It depends where you get that single family unit, right? Down here in Florida, if we in Central Florida, you do Windermere or Dr. Phillips Winter Springs, yeah, you probably get the family in there, right? But if you do, let's say on the fringes of downtown Orlando, it's going to be rough, right? That's where you really do have to focus on the multi doors, like the quadruplex, duplex, and stuff like that. So I'm with you on that one.
And then the only thing I'll add to that is like I had a lot of family who they're homeowners but older, right? They're nearing retirement age. And then they have this home that's paid off or nearing paid off, but they don't have shit else. They don't have any other assets, right? And this is, you know, it's like it's in my family, and it's I've gotten a few DMs about it too, where it's like, well, I got my house about to be paid off. What do I do next? Do you have any other assets? Like, what does retirement look like for you? And like many people only have that one home, and it's not making them any money. So it's like once you get towards retirement age and you do have a duplex or two, you do have that income that's going to be fully profit minus taxes, maintenance, and insurance, you know? And then you technically don't need to have insurance on the property either. Like if you have a home paid off, but you all, you know, like you should have insurance, right?
Right.
But it gives you income in that retirement age if you so choose to keep the house, right? But I've tried to talk my aunts and stuff into it, you know, like here they are calling me a real estate professional, asking me what they should do about money. And I'm like, buy some fucking real estate. Of course I'm going to say real estate, right? It's what I already do. But they're like, well, I don't want to take on more debt and da 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 da. And that's simply because they have the wrong connotation towards debt in the first place, or at least debt that's tied to real estate, you know? Well, why would I put a loan on it and it's paid off? Well, auntie, you said you ain't got no damn money. How else you gonna get money? Like your house
Well,
is
it's
supposed
just
to
the
be an asset.
education, right?
Yeah, right.
And that's the same thing on the investment end as well. Like, you know, people are afraid of the markets, right? But it's
Yep.
like, why? Right? If you're investing for a long run, history showed that your account values will grow. Yes, you're going to have dips here and there, but still, it's all about the education.
Yeah, just
So
don't put
you
all your money
educate
in all at once, you know?
yeah, you know, you have to diversify that stuff. You know what I
Yeah.
mean? So, so yeah, man. I mean, it's our schooling system definitely. it does a disservice to our kids, and
Well,
that's why it's
it's
very important for all of us right here to have that education or give that
yeah.
education to our kids, especially when it comes to money.
The school is set to it's to set up us is to set us up to be employees in the corporate
Employees.
space, you know. And so there's a few of us that break out through whatever means, investing, real estate, business, whatever. But the vast majority, like it's meant to hurt us into just being a consistent employee perpetually and
Right.
being stuck to consumerism, right? Like there's people who make decent money, but because they make 60,000, they feel that they need to have a 60 or $70,000 car. And it's like you actually don't make enough money for that vehicle. Like, yeah, you can cover the payment, but now you can't go travel. Now you can't do XYZ because you're spending so much on whatever bullshit to, because you deserve it.
Right.
It's like, so we oftentimes associate the wrong things with wealth, and the wrong things with money, right? Oh, the money should buy me the clothes, the cars, or whatever. And it's like, yeah, I mean, it's supposed to, but there's an extent or a limit in terms of what you should spend on certain things. And a lot of people consistently blow the budget or are afraid of a budget altogether. Like I know a few people who are like, well, why would I budget when I make $80,000? But do you have $80,000 to show for it at 40 years old? Like, how we only got $20,000 saved? But it's just like at 40, you might want to have 1 or 2 times your income saved somewhere, and you don't have that, and it's like you're doing something wrong, but they don't want to like realize that, right? Because we're caught in the lifestyle of it, like the lifestyle creep or whatever the case, keeping up with the Joneses. The money is meant for usage and consumption as opposed to growing and making our lives a bit easier. But yeah, like I'll admit though, I'm not very liquid. Like I would like to be liquid, like Nerd Million over here.
I am liquid AF.
No, I do think that's an interesting one. So for me personally, I don't know if you're the same way, nerd. I set up my stuff to be more liquid versus, I'm sure, real estate investing. It's so much more hesitant on how you do things because capital is tied up.
Yeah, I mean, my money is tied up. They're all in retirement accounts, right? So that's why I'm probably going to be a real estate professional at some point in my life just to get money out of it. Or, I'm probably going to do a Rob's 401k, something of that nature to get access to that money. But, there are other ways like to get liquidity. And doing Roth conversions is probably the way to do it, and using real estate. So what I'm planning to do is like, I'm hoping that there's like a big final crash in real estate where I can start buying a lot, which I can then start depreciating to offset conversions. And right when that happens, I'm going to use my income to acquire a lot of these properties, lever up as much as I can. And then from there, I'll quit the job. I'll quit the job. Cash flow will stop, but then I'll do Roth conversions and then use the real estate to offset it. So that's the current plan. The other plan is partially I'm going to use maybe $500,000 in a 401k to do like a Rob's 401k to start like a financial advisory business and just grow it that way. But yeah, those are like a couple of the things I'm thinking of top of mind. Acquire like a book of business, something that in that manner. But I do have my own like rich contacts, so that could be it too. I just don't like the idea of working forever. So that's that whatever you said, Duplex King, resonated with me. So
Yeah,
Yeah.
I'm in full agreement, and I like the idea that you're talking about. Then potentially buying a business. I like buying businesses over starting new. Like, yeah, you could start one, but it's a longer, harder road to start one and reach profitability or the most ideal level of profit, whatever that is. But you can buy something that's already doing pretty well, and you could buy it cash if you wanted to, right? And so it's like you're going to have a pretty high level of profit from said business. But you can also leverage it too. So it's like you could buy it cash up front, and then re-leverage the business, after a year or two to get some of that cash back.
Yeah, I mean, the whole purpose of real estate is really just to depreciate the property so I can do conversions, Roth conversions. That would be the strategy. And then the business is just to get access to the capital, because then I could pay myself a salary while it's a corporation that I own. I don't know. I just always think of ways on how to avoid the tax, man. I ain't about to subsidize another family that doesn't mind. No
Oh
thing.
my God, you said that.
Not my responsibility.
But no, I'm a fan of that approach, and I do think nerd, you'll probably be fine with that. And the main thing is with real estate, you have to decide how you want to do it. The book of business, starting your own business is tough. I mean, I can't speak on it too much, but I'm third generation at our restaurant, and that is a long process to get to where we are or where we are. So
Yeah, the UPS store I bought, it was in existence for just about 30 years before me. So I think like the first owner had it for 10 years. The last owner had it for like 18 or something like that. So it's just like it was already there. So that's also why I like buying something existing, right? Because it's like it'll be really hard for me to go in and just completely fuck it up, right? Can I mess up some things? Sure. But to just completely annihilate it, it's hard to do at that point. It's hard to do because the customer base is already there. Like I got customers who have
The hard part.
been there for 10, 15 years, like they didn't like me when I came in because I came in, raising prices. I got to make some money now. And prices haven't increased here in like 10, 15 years. And so people were complaining like, you can't just raise prices. I had my mailbox for 15 years. And then, for a few of them, because they were, very antagonistic, I'm like, would you like to keep your service with us? Or would you like to go and search somewhere else? Because I raised prices like $5, right? And it's like it went from 30 or 31 to 35 or 36, and people threw a fucking fit. But I had already did my market research and talked to the other owners around me who were already charging like 40 and 45. So I'm like, I didn't raise you to what they're charging.
Yeah.
So it's like, but you're going to complain and then tell me you're going to shop around. I'm like, good luck. And they're like, well, you don't know. And I'm like, actually, I did market research first, and I'm still cheaper.
Smart.
So but
And that's where a lot of people fail, right? Without doing market research. Like
Yeah.
you think just jumping into business, you're going to be wildly successful. If you don't get the temperature check around you, how are you going to be competitive in that space?
yeah.
That's wild.
And so from a
it's also
mailbox perspective, I think we grew revenue 45,000 in total over the last 2 years or so. So it's been good from like certain avenues of it. So yeah, you got to do that temperature check. You got to do that market research. And yes, people will scream, cry, and complain, tell you that you ain't shit and you can't do this and that they're going to leave. But then they'll go and call around. And then they're like, well, actually, I guess I will renew because it wasn't that bad of an increase. But like, people like a $5 increase over a year is $60. And I'm like, you sitting here cussing me out about $60 for real? Like, are we serious right now? But but people, they have that connection to the business, and it was good to see because they're passionate about the service and the space, and so it's cool to also be able to still try to provide a good quality of service as well while being profitable.
Futures, maybe you could tell us a little bit about what you do. So I trade derivatives as well. Leaps mostly. Sometimes I gamble with selling puts when the VIX is high. A bit of a gambler. And there's zero DTE, so I know ball. But I'm curious, like, what do you do? What's your strategy?
Yeah, so my main strategy is like long term investing. But for the future side, so I used to trade options, and I was like off and on profitable there. And I used to do the same thing. I used to do the 0-day options or weekly options. And I just kept getting burned on them, mostly from like the Greeks, so like time decay. So a lot of times I would be right, but like the price wouldn't really move much. So a buddy that was into futures that was kind of successful with that told me about that. So I was like, all right. So I started off with prop firms, using those just to get like a general idea of the market. And I just really took to it. I really loved it just because it was there's like no pattern day trading. I could trade my own strategy. So that's what I do now. I basically just started off with a couple prop firms, and I just scaled up. So basically, I try to get like 200 to 500 per account, like daily or for the week, and then each month I just kept scaling up. So now I have about 10 accounts going, where sometimes I'll burn some, but a lot of them have been consistent with payouts. And like strategy wise, I mostly use something called pivots. So they're like a lot of like money institutional buyers and use them. So a guy that was like into Wall Street really showed me about them. So they just really help with like support and resistance. So I use those for my levels, and then I also outsource some levels from like other professional futures traders. So like a lot of time I was getting like okay levels, but I was just using like too much of my own time to find these levels. So I was like, what am I really good at? I'm good at executing a plan once I have like set levels or like what I'm supposed to do. So I really just started outsourcing a lot of this work to other professional traders. So like I'll pay them, go through their like services and get their some of their levels, and then I'll just execute them with mine and then a couple other guys. So it's been going good. I've been doing it for about 3 years now, and then I got the accounting. I'm still doing that full time, so I got that to to support the trading as well. So it's going good so far.
Let's see. For I know futures, it's more like it's like a 1-to-1 ratio in terms of like price movement. Options though, it's not 1-to-1. It could be 1-to-1 if it's deep in the money. It could be less if it's out of the money, but you're paying a premium. And I think that's what probably turns you off about options, the premium that you're paying, right?
Yeah, that. And so futures are like 1-to-1, but they're you can definitely leverage up on
Yeah,
them.
use like
Yeah. So that was like what, and options are good. Like I know people that make money with options. It just wasn't for me because like a lot of times, for example, for like earnings, right? Let's say Apple crushes earnings. I would get Apple calls, and this thing will crush earnings, and then they'll be like they'll dip, the next morning. So like I'll be up 10%, and then I'm counting my money before I even get it, and then I wake up and Apple's down 5%, because everybody sold pre-market or something like that. Whereas futures, I'm just in and out. If I see it, half the time I don't even like trade I won't trade the Apple earnings. I'll wait till after the earnings. Apple might shoot up. They beat earnings. They shoot up to a price, and then I can just literally see how it's going, step into the market on my future side, get that cash out, and then I don't even care what happens during the earnings call. I don't care what happens the next day, pre-market. So like that's what I really liked about it. And the other thing I liked about it is their market stays open pretty much 23 hours. So like it was easier with like my work schedule. Like I work from home now, but when I was going into the office a lot before I scaled back some, it was easier for me to trade before work or trade after work, versus like looking at my option screen during work and trying to juggle. So it's just a lot more convenient for me.
Let me tell you guys a story. So one time, I sold a put in the S&P 500. Well, there it was a spread, so I'm able to take a 10x, like multiple amounts of leverage. Um, and then the market went against it, so I was forced to take ownership of the stock. I didn't have the cash, so it basically asked for $700,000 worth of stock, and I was like, I don't have that cash. But in my account, I saw that there was $700,000 worth of stock that I had exposure to, that I owned, that was up a lot because the market dipped a lot and it bounced back. And then I called the representative and they're like, "Oh yeah, you violated the free riding rule. Yeah, you got that exposure." And I'm like, "How do I have this exposure? I don't even have the cash for it." And then they're like, I guess you could just sell it." So I just sold it, and like, yeah, it was like a big trade. And I was like, well, never touching zero DTE again, because I never want to get that kind of that. I can't do free riding violations multiple times. They'll like stop me after a while. But in essence, I don't want to take that kind of risk. So I moved to I guess it's kind of the index futures. So the index futures, where it's cash settled options essentially.
Yeah.
It's still using kind of option like payouts, but it's the style of it is cash settled, where I don't have to take ownership of anything, which is perfect for spreads. The problem is though there's like a 10x multiple, so it's a very big leverage. But I utilize leverage when it makes sense statistically in the options market anyway. So yeah. Anyways, just a little take on that.
Yeah. Yeah. Well, that was the other reason why I went to futures too, because that same thing like scared me with options, getting assigned something. Because before futures, I traded with margin, which I wouldn't recommend anybody, especially if they're starting off. But I was trading with margin, but I was doing it like with again, a guy that was really successful. And although I was trading with margin, let's say I think at the time I had like 5K and on my own money, and I was getting I think it was 6x, so I was able to trade with 30K. But with that being said, I was never risking 30K on a trade. You know what I mean? So like, yeah, I could use 30K if I wanted to, but every trade I would take would be like, I would have a set risk. So I wouldn't lose, over a certain amount. So I never had like margin calls or anything like that. But what I loved about futures or what I really liked about the margin, the main thing with that was just like the no pattern day trade. I could get in the trade, I could get out. I could get in the trade, I could get out. Versus with like options, after I hit my however many trades I could take for the week, I would be basically X'd out, until I have to wait for my next trade. But that's what I also liked about futures. I can get in as much as I want. And then similar to how I was trading options, if I'm putting in $100 with these accounts that I'm using, if I blow that account, I'm only losing that 100, which I love because I could be just as margined as I was when I was trading a real margins account. But now I could be aggressive when I want, but I can know in the back of my head, if I lose said account, I'm only losing the 150 or whatever I started. So like some of these accounts, I've started, with 150, but I've grown them up to like 4 or 5K. So now it's just house money. And then I just take out 4K, start with my 1,000 again, and then buy 10 more accounts. And I just keep slowly scaling it like that. So like if anybody was trying to learn it, I would recommend, something like that, starting small and then saying, taking whatever your money and just knowing how much you want to lose, or how much you're willing to lose, and then just slowly just scale them up, one by one. You can definitely build them up. It takes time, but you can definitely build them up over time.
Yeah, I need to check. I'm actually looking at a dividend ETF that uses, futures as a offset from the gain and loss. So I might send you that ticker, Sultan, and see what it. Oh, I bet futures, and see what what do you think of it?
Okay.
Duplex, I know you asked about it. I'm not a fan of leveraged ETFs at all. It's so much, you're waiting basically on black swan events to get big profits.
Technically, some of them have been around and survive black swan events. So, for example, the older ones that are probably 2x levered ETFs, I think they were around at least 2003. So they survived 2008, a 55% market crash. That's a 1 in a 50-year type of move, right? Well, technically it happened in 2000, but whatever. Sometimes black swans happen in a decade. But we also, so survived through the 55% crash, survived through COVID, 35% crash. Then we've had multiple close to 20% drops more recently.
But
COVID is when I started to get into them.
It's more
they're still around.
structured, right? Because it's a daily change. It's a daily percentage movement. So the previous history doesn't matter.
It's still going to track the market roughly, right? Depending on which one you do. So you could do like SPXL, right? And it's going to do 2 to 3 times, SPY, up or down, right? So the other day it probably went -20 while the market went -5, whatever the case, right? But I didn't discover leverage ETFs until like around COVID, right? Like I found Teckle and Soxel and Rettle, and I've been making the killing. like you can dollar cost average them, similar to what you would do with the S&P 500 or whatever. But you do have to watch it, because once you start to see those peaks and you start to see those that RSI get to a certain height, it's like, okay, maybe I'll sell all or some or whatever my position in this, and then watch the market kind of like dip, whatever. So I don't know. Like I kind of kicked myself this past year because I could have left more money in like Teckle and SPXL through the summer, right? Because I had like sold some at the end of last year because I knew the market would tank some at somewhere beginning of this year. Finally tanked in like, what was it, April or March or so. Bought back in, 2 months later, I sold most of it, if not all of it. And then I bought real estate. But it's like, maybe I should have held it a little bit longer, right? And then sold it in like September, because, my 40 grand would be like 160 instead of, 60, So it's like, it's one of those things where it's like, yeah, it is more so gambling, but I think you could dollar cost average a smidge into it.
I could talk into this because I was part of a forum where it's a bunch of CFA charter holders nerding out on this subject. And it's the funniest thing, because they would make these arguments on like, it's actually really good, but it depends on the type of leverage. So I'll get into the nitty gritty, but bottom line, the SSO has been around since 2006. So what was the market peak? It was around 2007. So this thing survived a 55% market drop in the S&P 500. The peak was probably at around $18 for SSO. And then it bottomed, it peaked around, let's call it $12, right? $12. And it bottomed around $2. So it went from, again, I mentioned 12 to 2. That is a significant drop, more than 80%, 90%. You could even argue that it's blow up risk in theory, right? But it bounced back. Today, that same SSO that was as low as $2 a share is now at $107. So even if you bought at the market top around $12 in 2007, you would have 107. You would have 10x your money. So that is the argument for SSO. It did not blow up during one of the worst market downturns in history. The only thing larger was the 1928 when markets fell 82%. And I would argue that that would have caused that ETF to blow up then. But that's 1 in 100 years, dude. So
Yeah. Yeah, my thing, I used to get the T triple Q leverage, but you guys are, to both of
Yeah.
your point, you guys are right. Like those things will go down, but
that'll blow up.
they'll bounce.
The
They'll bounce.
TQQ would have blown up.
Yeah, that would have blown. Yeah, but like these SPXLs, I get them in my daughter's account now. She's 2, so I'm like, if the thing
Oh,
goes down
yeah,
and
yeah.
blows up, I don't care. I'm just putting more money in it, and I'm just riding that thing up, and then I'll put 1,000, 2,000, couple of whatever, and I'll let it ride up. I'll take it out, and then I'm like, if it goes to whatever, half off, then all right, I'm gonna buy some more because in her eyes, it's just I'm just gonna,
It's going to
obviously,
be insane growth over the
Right.
next 20 years.
yeah. So I put probably like 10% of her portfolio with just regular other like index funds, but because I was like, yeah,
I just looked up TQQ because you mentioned it,
yeah,
and it has a longer history. That thing's been around since 1999.
yeah, yeah,
So that survived 2000s,
Yeah.
2008.
22,000% return.
yeah, yeah.
22,000% return.
But so the return from 1999 is about 1,000%. That's actually not that good.
Yeah.
It's not
Hold
that
on,
good
man.
because I know what return should be around that 1999 time period, and it so it does eat on your returns when you do leverage. It eats to it a lot more. So I would not do that as much leverage. The 2x did extremely well, but the 3x, the returns were impeded because of the volatility. That's interesting.
And the thing for me, probably why I have a little bit of a caveat on them is because the minimum. So like the leverage accounts I was in had minimums to buy in them. And the minimum to buy in was around $10,000.
Oh, yeah, no.
So
Yeah.
yeah, those. So I have a little bit of reserve.
You got some bad bias.
Yeah.
You're like, fuck that. Yeah. Fair
But no,
enough.
I
Fair
have
enough.
done SSO before and some of the others. It's just you have to be tied into your screen, and I'm not trying to do that.
Oh, sorry. The information I gave was incorrect. It showed me QQQ, not even TQQ. Let's look up TQQ.
Yeah, TQQ is like 20,000% return since its inception.
But what's the inception date?
Let me go back. Hold on.
Oh, it's from 2010. It did not survive. We don't have data on
Yeah.
GFC. So that means this is useless information because it could have easily blown up during GFC.
Yeah. But I mean, it's still going to track QQQ for the most part, right? It's just going to do the 3 times up or the 3 times down. So it's like, I don't know. In theory, if QQQ is fine, then TQQ should be fine. But it's not fine for like all your money, right? Just don't put all your money.
look at what happened on 2021, dude. So 2021, it fell significant, and that wasn't
Yeah,
even
that's the entire market though. That everything fell. Everything fell.
no, but not to the level they did. To the level they did, it's like because the thing is,
Yes, it's
QQQ is
it's
3x. 3x
Yeah.
is a different beast,
Yeah.
and I think the CFA people were saying that, hey, yeah, 3x is not good. You'll blow it up at some point. So that's where their concern was. 80% drop. That was not supposed to be an 80% drop. That was only supposed to be like a 25%. So it really was 3x.
yeah.
But imagine if you had a 50% drop on a 3x. That means it's down 150%, which means it probably blew up. So it would not have survived the GFC.
I am curious now. I'm gonna have to run a comparison, but I prefer smaller versus leverage. So like I'd rather do like the NASDAQ 100 over the S&P 500 leverage. Now I don't know how those compare. I haven't ran that yet, but that would be if you want that extra bump. That would be my approach.
Google used to do the stock comparison where you could compare two stocks. I don't see that no more. Or am I in the wrong? Let me try desktop view because you used to be able to put like
Compare.
type in like
Yeah, yeah.
QQQ and then
Hmm.
TQQ or something just
Yes,
to
sir.
compare at least the charts. Anyway, yeah, they don't have it anymore. I guess we got to use Seeking Alpha for that.
I prefer seeking arrangements. Just kidding. My wife is upstairs. Probably gonna tell me let's go work out soon. I'm probably have to go. But anyways, I enjoyed hanging out with you guys.
For sure, for
Yeah.
sure.
Glad you came on.
Type it in as a slash.
What's for breakfast, guys? What are you eating for breakfast? Let's hear it.
My wife I already ate. My wife, she made just pancakes, eggs, and sausage.
Nice.
Yeah, so I had some before I got on.
Lucky,
I
lucky.
did oatmeal and fruit with a scoop of protein in the oatmeal.
Oh, you did it yourself, right? No one helped you.
No.
Well, I haven't eaten. Marina, can I get some help here? Whatever. I ate
Hello,
Panda
Ajay.
Express at midnight. The leftover Panda Express. So in essence, I'm just practicing intermittent fasting. Have you heard of this?
It's a great key to longevity.
You do intermittent fasting? Are you for real?
I used to, yeah.
I mean, it's not as difficult as it sounds. Like literally, it's just like before you sleep, you stop eating, and then you like wake up, and
Yeah,
then
have your
Wow.
last meal at like 5 or something, 4 or 5 p.m. And then your first meal shouldn't be until like after 10 a.m. or something. And then you have a decent length of a fast. I mean, it's
that's
an
insane.
easy, air quote, easy way for like weight loss or whatever.
You're essentially asking me to eat my last meal at 5 p.m. I'm up until 2. I'm gonna eat something at midnight. So that's
So
not
you
gonna
should be
work.
going to sleep earlier. That's
Uh,
issue number one. Issue number one.
Oh, yeah, that's true. That's fair point. But I can't sleep, so it's not a choice. I can't sleep. You know that saying, Wall Street, money never sleeps. There you go.
I hear you. Hold on real quick. Hold on. There's this to the can't sleep thing. I don't know if you really want to sleep or not. And I'm not like selling this to you, but there's a 400 milligrams of magnesium glycinate with ashwagandha, and it'll help you go to sleep more easily. So if you're stressed or thinking about numbers, this will probably help knock it out your mind. Um,
No,
It's
I play a lot of video games before I go to sleep, like a lot. Like I literally bought a
He's
Steam
playing.
Deck, so I could like do this and then go to sleep. I have an iPad and a Steam Deck that's plugged on like a platform. I have the choice to do whatever, or I could bother my wife.
What are you playing nowadays?
Um, let's see. I'm playing a lot of Attack the Spire or something like that. I don't really know the name, but I just bought it recently. It's pretty fun. So it's like a turn-based game, and it's just for me to like chill, play while
Unwind. Yeah.
uh,
Unwind. End of the day.
yeah, or like I'm just trying to tire my brain out.
Yeah.
Just get it to the point where it's tired.
You're gonna tire yourself out with overstimulation.
Is that how that works?
Yeah.
What am I? So what am I gonna do? I'm just gonna stare at my roof the whole time, like, yeah. They can't do anything like that. And it's funny. You're like, oh, you need to stop thinking about numbers. That's impossible. Because I wake up every morning, I roll up, count my money. I stay wavy.
I used to obsess about real estate. Like I still do. Like I still look at properties and like property in Chicago and property throughout Ohio and trying to find like a good deal. But like when I was younger, like really trying to scale, I was literally getting alerts and seeing alerts 24/7. people are like, "How are you seeing this?" I was like, "Well, I have my like Redfin and stuff set to like when anything new
Certain
within this
prices.
parameter hits the market, I get the alert." So I would be like looking at shit 10 at night, 11 at night, 12 at night, and then I'd be like, "All right, let me run the numbers." But yeah, I've had those phases. I still have them on occasion, but not as bad as I used to.
Yeah,
I
that's
have
my
a real estate
phases.
template where I plug in numbers,
Yeah.
and then it'll tell me whether it makes more sense to buy versus the rent. Um, yeah, I haven't looked at it in a while because where rents are, but I'm sure eventually it'll balance out. I hear they're gonna do like massive money printing, so that's gonna be a very nice day, right? Like we're all gonna be wealthy with our assets, right?
I mean, if they ever print, like, yeah, I mean, our values are going to shoot up again. So,
Yeah, I heard.
um,
I
I mean, that's pretty much how I got like rich this last time, right? Like, I had a decent amount of units before 2020,
yeah,
and then my values doubled by 21. Like it didn't really make sense, but I got the benefit from it. And same thing for anybody who was holding stock or crypto or whatever. Like, everybody's assets damn near doubled or better.
yeah,
Um, and so, at the end of the day, you want to be investing in something, whether it's stock or real estate or crypto. You want to be investing in something so that way your money just moves without you having to, earn it or work for it 24/7.
I do think though on the real estate side, what will be interesting, I'm gonna kind of watch for is the quote unquote transition of aging. So
Yeah.
people are getting older, and you see it starting to happen. I don't know if you're seeing it in your area, or if you're I'm seeing it some, but people are aging out, passing away, leaving their homes to their heirs, but their heirs aren't in a situation to be able to keep up the home, so it's going on the market. So you have all these different flows of pretty decent homes and good locations, but the kid is just looking more for quick cash.
Most people don't want to follow their parents' footsteps. Like, every property I bought was from somebody old and retiring damn near. Like, my first duplex in Chicago, it was from a guy who was like 60 and going into a condo. He was like, "I don't want to deal with this anymore. I want a condo," and da da da. Da. Great. The the second duplex I bought in 2018 was a grandma who moved from Dayton to California, and she was slowly selling her properties off. Her kids wanted the property for free or whatever, and she's like, "I'll just give it to you for a base price. I'll sell her finance." And they're like, "Well, why can't you just give it to me?" She's like, "Well, I still need money because she's still like 70, so she can't like give it, but she was willing to sell it for less than, market price, but kids didn't want it. They wanted it, or they wanted it, but only like entirely free. They didn't want to pay shit for it. She's like, "I'll sell her, finance it to you. Like, you don't necessarily have to come out of pocket." And they were like, "Well, I don't want a mortgage," like, but
right.
it's like that second property. I mean, for me, like, I paid market price for it at like 65.5, but she was willing to give it to them for 30 or 40, and I'm like, each unit rented for, 750 and $800. Like, it was super profitable, like, I think I was making 900 to 1100 in profit or so on that property. Right. And imagine how much more profit they would have made had they just done it for the
Right.
30,000, like,
And
you know,
especially acquiring it way undervalued. So
yeah,
Mhm.
but they didn't want to do it. And she was like, "No," like, which, that's fine. And even the business I bought, right? The family didn't want it, right? So it's just like, oftentimes people don't know or understand it or get the benefit of working in the business as an owner, right? Because like sometimes people end up working the business, the family business, but they only know it from the employee side and they're not making, the best money from it. And so they don't necessarily see the best value in it or whatever the case might be. And so it's I don't know, I think it might be on the parents too to kind of like tell them the benefit of keeping or maintaining, but sometimes people don't want to learn because there's people who are 30 and 40 years like, "No one ever taught me." You're fucking 30 and 40 years old. Teach
Yeah.
yourself, like you ain't,
yeah,
had any kind of curiosity. But
libraries are free. So
you know,
computers there are free.
yeah.
But yeah,
Yeah,
I
this has been
do
good.
think there is a little bit of sometimes a disconnect between like when a kid is quote unquote just W-2 at Chick-fil-A versus the person that bought the franchise. And the learning curve from becoming, the server to the owner doesn't get passed on as much.
Yeah. Yeah, the parents didn't do a good job in, trying to coach the kid up and being, operational and a leader in a space. They were more of a employee in a space. In some cases, not all, but some.
Right.
And so, it's hard. And I know like there are parents out there who's like, I want to give this to my so and so, but they don't want anything to do with it. But it's just like, what's the kind of energy that the parent put towards it too? Because there are some people who all they do is fucking complain. So it's just like, if you've had this business, you're making good money, but all you do is complain about every little damn thing. Of course, nobody wants that shit, even if it's free. Because it's like all I've heard from the last 20 years of you talking all this shit about it. Like, oh, this and this customer that and rates this and all that. And then it's just like, yeah, nobody wants to inherit what sounds like problems. And so, I think it speaks to the business is going to be ebb and flow. There's going to be, I call it beautiful chaos, right? There are some days it's fucking great, and there are some days you'll get 10 dumbass customers in a row. And either way, you still have to deal with it, right? Like you're still going to be profitable, you're still going to make money, but you still have to deal with those inconveniences or whatever the case might be. And so you have to speak lightly about the things that you claim you take pride in.
Yeah.
Like you don't want to be speaking negatively about anything. Like, okay, you're in a relationship, great. Yeah, y'all might have some issues, but should you be blasting your wife or other online about it? No, you shouldn't. Keep that shit to yourself or your like therapist. like you don't want to be like painting a bad picture and putting that bad energy out there. But some people do that with their businesses or their investments. So it's like it kind of makes sense why some kids don't want it or don't want to be involved. Because the house has always been a headache and da 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 da. It's just like, well, yeah, why would I want that?
And it's also odd too. So I think I'm at a point now that I actually crave chaos. Like I thrive off the craziness.
Yeah.
But it's not like things are going bad. It's more just chaos is sometimes when things are going well.
Yeah. As a business owner of a UPS store, we get chaotic in June for student move out. Students who live near the campus here, they're packing up stuff, and the store is like busy. Like June, we'll do 90 to 100K. December we'll do 80 to 90K or something like that. Those are like very busy months for us. But the rest of the year, we're happy to do 65, 75 in that range. And so it's like pretty chill overall, but we do have chaotic days of just like, what is going on? Like there's a lot of traffic in here right now, but you kind of have to be willing to, deal with the ebbs and flows of it and understand that it'll ebb and flow, whatever it is,
No, I'm sure futures you've seen with the accountant stuff, all the craziness on the book side of just some of these businesses.
Yeah, no, for sure. Like our busy times right now, we're going through. I'll probably put some hours in after I get off here, but like extensions, and then our busy season in general is always crazy. It's not as crazy as much for me now because I've been there a little bit, and when I first got into accounting, I was working for like one of the big four, so that was like crazy. I did that for like 3 years. After I did the math, I'm like, I'm probably getting paid just as much as somebody at like McDonald's based on like the salary and the hours. I'm like, I'm coming in 8 in the morning, I'm leaving like 12 at night, and like that wasn't for me. So like I scaled out, and then I went to a smaller firm which I liked. And then I went to a smaller one where I got to like just work with some people that I really like. So like that's what I'm doing now, where I'm like I'm working from home, I'm trading, I get to run my other business, and
Nice.
yeah. So like, but yeah, no, it's definitely like crazy, like that that tax time, which is ridiculous.
I'm glad you made a pivot.
Yeah, no, thanks. Yeah, 'cause I'm
Yeah.
like,
Congrats.
I knew that probably like the first year when I saw like the people that were making the money, and I'm like, wait a minute, but they're like working just as late, with us. I'm like, so this is the future, like I put it together real quick, and I'm like, all right, so I got out. It took probably like did 3 years and got out, made the pivot.
Yeah. Sorry. So, well, you still do accounting, right? What I recommend is actually you try. My sister had the same background as you, worked for Deloitte,
Okay.
but she switched to corporate finance.
Okay.
Pays better, and pays better. Your hours are so garbage, but not as garbage.
Hmm.
So I take
Yeah.
a look at that, if anything.
Yeah.
That was
All
her
right.
trajectory.
Yeah. Yeah. Right now, I'm doing like accounting and auditing. Probably the height of my career, like like happiness wise, was like probably like I guess recently, like a couple years ago, where I was working basically like with financial advisors. So I had like 50 clients where I was just running them. But it was like super cool because it was like all stocks related, and like I'm looking at their books and I'm like,
Right.
okay, like they're invested in this, and I'm getting ideas, and it was just like super simple. But then we got basically taken over from a client, and then they're for a company, and then they're like, we're doing no more of those clients. So I went back to like the older clients, and that's when I really started making my, you could say, transition, to my own business and other stuff. Because like at the end of the day, you're really a number, and you're kind of got to forge your own path, and have at least some control, if not all control of it.
Yeah.
Yeah, it's cool. It definitely helped me with trading, though. I probably wouldn't be as good at trading now if I wasn't working, also, because I definitely, like, my first couple of years, I blew through a lot, like learning wise. So you definitely need money to get through that as well. So like it's it's not all bashing the corporate. I definitely it helped with the
Yeah.
cash flow to go through that phase.
Gotcha.
Yeah.
Well, I think
I'm glad we got to.
end it. If any of y'all have any last things you want to say or promote yourself in any way.
No, this was good. I shot y'all a follow. This was really cool. It's always good, just learning other avenues. I feel like me personally, I'm always just like tunnel vision and stuck in like accounting or finance or like trading. So like it was super cool from both of y'all, just to hear other avenues, just to like expand my mind. And then following wise, whatever, you guys can follow me or anybody in the chat. I just post usually trade videos and stuff like that. And then we got a small Discord as well.
Nice.
Absolutely.
I did follow back. I followed back.
Yeah. Nice to meet you, Futures. Duplex. I already know who you are, sir. And Jonathan. Yeah, thank you for hosting, man.
Yeah.
Yeah. Thanks for hosting. Appreciate it. It's been fun.
Y'all have a good weekend.
All right.
All right. Take care, y'all.
Take care.
See ya.
All right, everyone. Appreciate y'all for stopping by. See y'all later.